Welcome to Legal Munch. This is Dr. Kalpana Jayas. In this lecture, we would be understanding basics of insurance law. Insurance law is something which is very important as insurance has been integrated to everyone's life or different kinds of insurance. And insurance is a kind of contract. So insurance is the silent guardian of modern civilization, and it is invisible in good times, indispensable in bad times. Whenever we are having great times, then we forget whether insurance is required or not. But when it comes to coming across bad times in our life, unfortunate times, then insurance is something which is savior. Whether it's a medical insurance, whether it's a life insurance, or it's a accidental car insurance, something like that. Now, the first pertinent question is why insurance matters. So, world without insurance, how it would be? That is an important question to be understood. A world without insurance, no matter coverage for accident, if there is no insurance, no life insurance for grieving families if an earning person leaves the world early, then who would look after the family? No health protection for medical emergencies if in case medical insurance has not been taken by anyone. Every risk falls entirely for on individuals. Sometimes they don't have financial capacity to address it. So insurance law converts uncertainty into security, making it one of the most socially and economically vital branches of law. First, before going to understand insurance law and its provisions, we should understand what is insurance. So it's a kind of contract. I believe most of you must have been acquainted with a law of contract. So insurance is a contract where insurer agrees to indemnify the insured against loss from specified risk. What is the cost of that indemnity contract? The premium in exchange for protection, the insured pays consideration called premium. Risk transfer, individuals pay small predictable amount to protect against large unpredictable losses. Statutory framework, section 2, subclause 11 of Insurance Act 1938 defines insurance business to include life insurance, general insurance, and reinsurance. Section 2, subclause 9 of RDAI Act 99 establishes regulatory authorities' role. Now coming to understand the present framework of insurance law. So historical evolution of insurance law in India, how did it come to the present shape? So in ancient India, concept of Yogashema, welfare, found in Rig Veda and Arthashastra, early form of risk sharing through guilds and shrenis. These were the merchant classes who used to sell some kinds of welfare bonds to the people. That has been connected with the concept of insurance. In 1818, British era, Oriental Life Insurance Company established in Kolkata. India's first insurance company is Oriental Life Insurance Company, which was founded by British government in 1818. In 1912, Indian Life Assurance Company Act 1912 becomes the first legislation governing life insurance. That is the legislative history which begins from 1912. In 1938, Insurance Act came into being, which consolidated and regulates both life and non-life insurance sectors. In 1956, nationalization of life insurance, formation of Life Insurance Corporation of India, that is the biggest public company that is popularly known as LIC. In 1972, General Insurance Business Nationalization Act created GIC and its subsidiaries. General Insurance Company. ADA Act opens the sector to private and foreign players, ending the government monopoly. Now coming to 6 fundamental principles of insurance on which insurance contract is subsisting. Number 1, utmost good faith. Ubrema fights. It is a common Ubrema fight is basically known as the meaning is utmost good faith. So both parties must disclose all material facts truthfully. Non-disclosure can void the policy. For example, if there is a medical insurance and there are conditions to disclose certain diseases, if a person who has to be insured is hiding and on investigation when he's claiming any medical insurance is found that it was concealed, then insurance company can forfeit the right of insurer. Insured. Insurable interest, insured must have a legal and pecuniary interest in the subject matter of insurance. It is a consideration-based contract that is called premium. Now coming to third principle, indemnity, the insured is compensated for actual loss suffered, restoring them to their pre-loss position. It's not about, for example, premium is 500 and there is a loss of 5,000. So if premium has been received by the company for making of up to the claim is 5,000, if there is a 4,000 expenses, then company would be giving 4,000, not beyond 5,000. Subrogation. After payment, insurer acquires the insured's right to recover from responsible third parties. Now coming to contribution, if multiple policies cover the same risk, insurer shared loss proportionally. Proximate cause, the only nearest, most direct cause of loss is covered under the policy. These are the 6 fundamental principles of insurance. Key principles in practice which we come across when it comes to execution of insurance contract. Utmost good faith, for example, non-disclosure of pre-existing disease, as I told you, can make the policy void. There was one case, LIC versus Asha Goel, insurer cannot repudiate without just cause. Insurable instead of valid, a wife insuring her husband's life. Invalid, a stranger cannot insure another's life. There was one case, Macora versus North Insurance Company in 1925, which is important aspect. A stranger cannot insure another's life. Proximate cause, for example, fire caused by earthquake, coverage depends upon policy wordings. PAVSE versus Scottish Union is the landmark judgment to understand what is the proximity cause. Types of insurance in India which are prevalent. Life insurance, which is one of the most popular policy to be bought by the people in our country. Nature of contract, nature of assurance, not indemnity. It is a kind of insurance which is based on the principle of assurance. It is not in case of happening anything like medical insurance can only be claimed when a person is hospitalized or sick as per the policy, or accident, or etc. Term insurance, whole life insurance, and annuities are kinds of insurance, life insurance uh, kinds. General insurance, contract of indemnity like fire insurance, marine insurance, motor insurance, health insurance, and miscellaneous coverages. Reinsurance, nature risk spreading mechanism. One insurance company insures another insurer's risk portfolio. Social insurance, mandatory social welfare like ESI, employee state insurance, which is covered under labor laws. EPF, Employees Provident Fund, which is also a social legislation where Provident Fund is something which is a government responsibility towards its employees. Crop insurance schemes, which are launched by the government of India, and these are covered under the category of social insurance. Now coming to a regulatory framework, our IRDAI, Insurance Regulatory and Development Authority of India. Headquarter is Hyderabad. It was found in 1999 under Insurance Regulatory and Development Authority of India Act. So key functions, Section 14 protects interest of policyholders, regulate insurer and intermediaries, promotes efficiency and health competition, specify code of conduct for agents, brokers, and surveyors. Primary legislation, Insurance Act 1938, foundational law on insurance business. LIC Act 1956 governs life insurance nationalization. General Insurance Business Nationalization Act 1972. Consumer Protection Act 2019, remedies for unfair practices. Insurance law in modern economy, insurance penetration is a 4.2%. India's insurance sector is percentage of GDP in 2024 has been calculated. The total GDP is contributing 4.2%, which is good. Market size 94 billion. Total premium collected across life and general insurance. Insurance companies are almost private and public, including operating in India, more than 65. Economic impact, it encourages investment by reducing business risk, provides long-term capital for infrastructure projects, promotes social security and employment stability. Now coming, what can be the future of insurance law? Digital platforms, insure tech companies like Policy Bazaar, Echo are transforming distribution and customer experience. Micro insurance, affordable coverage reaching rural India, underserved population. Parametric insurance, trigger-based policies for rainfall, earthquakes, and climate events. Cyber risk coverage, protecting against data breach, ransomware, and digital threats. Blockchain and smart contracts, transparent and automated claims processing, food prevention. Climate risk insurance, coverage for environmental disasters, sustainability challenges. Insurance law sits at crossroads of law, economics, and social welfare. Understanding how legal frameworks cushion risk in uncertain world is essential for tomorrow's legal professionals. With this, I would end here. Happy learning. Thank you so much.